Supply and demand. Those are the forces that are supposed to control the price movement of stocks. Simply put, supply and demand does control the price movement in stocks. Investors understand this principle, but generally don't understand the nature and potential sources of both supply and demand. Have you ever watched the stock trade up into good news only to watch it come back down when the news comes out? You don't have to understand the psychological side of demand. Investors are looking for the edge. They are looking to buy and own just before events. Sometimes they expect a positive development for any number of reasons. Sometimes the action in the stock brings them in. When the news comes out, their edge disappears and the traders sell. The stock comes back down after the news and amateurs scratch their heads. On the supply side, you have to be willing to dig into the SEC filings to figure out where supply might be coming from. Most smaller companies are not profitable, so they need sources of capital to continue to expand their business models. Very often, they turn to equity financings as a source of funding, which can lead to inexplicable supplies of stock and prevent upside progress on price. You can usually find potential excess supplies on the balance sheet of publicly traded companies. They could be in the form of convertible debt and/or some sort of convertible preferred stock. Try to figure out the conversion feature. If the debt or preferred can be converted to common stock at a percentage discount to the prevailing market, you might want to avoid that stock. There could be unlimited excess supplies. If there's a fixed conversion price, it's not a big deal, even if it's below the prevailing market. This is because the holder will make more money if the stock goes higher, so there are no conflicts. Also, use the financial statements to get a feel for the company's market capitalization. This is computed simply by multiplying the number of shares issued by the price of the stock. If it's at a reasonable level relative to the company's trailing performance and upside, you have a better chance of making money. When you see a company's number of shares issued go up quarter after quarter, you can be fairly sure any upside in the market could be sabotaged by excess supplies. I do the research myself and provide this information on any stocks the OTC Journal covers. You won't have to dig it out yourself. I'm always looking for situations where the supply-demand dynamic can lead to upside for you.